That's all, folks. Welcome. Hey guys. Hello, YouTube. Welcome to the Dave DY Show. Remember the Looney Tunes? The Looney Tunes. I grew up watching the Looney Tunes. Porky Pig. I am Elmer J. Fudd, millionaire. I own a mansion and a yacht. Yeah, and Mel Blancs died. And when Mel Blancs died, every one of those Looney Tune voices died with him. Daffy Duck, Bugs Bunny, Foghorn Leghorn, Porky Pig, everyone. I am Elmer J. Fudd. They all died. His kid tried to do it, and his kid wasn't too bad. Clearly because I think his kid was in the studio, had the same genes as the old man. Not as good, nowhere near as good. And you immediately knew the difference. That's not Daffy Duck. So you have an icon of a cartoon, an animated, hand-drawn cartoon that revolutionizes televised content, especially for children. A massive audience, right? And they're captured. They sit there in front of the TV. And their parents love when they're in front of the TV. And that guy explodes, and the voices are awesome, and he's got a gift, and then he dies. Yeah, it was unfortunate. I remember that, even though I was older. And I think they're gone now. I think there are Looney Tunes. I think there are voices. I think the characters are popular. Pfft, whatever. You know, you go to wherever, Disney or whatever it is, or you see some of these characters and they walk around, but it's not the same. It's not. You know, like watching the original Woody Woodpecker cartoons. Woody Woodpecker, God. He had the faux hawk. All gone. And you know what? Those were exceptional individuals and companies that produced that. Those organizations and those people worked their balls off and produced awesome content, and it showed. And it's not as good anymore. I don't know, maybe it is. It's much more diverse. It seems a lot different. You know, little Einstein and Dora the Explorer, and they're yelling at me in Spanish. Casa! You know, or whatever. Backpack! I don't know. But what did the boys watch? Some of the cartoons. SpongeBob. You know, SpongeBob is I think it's a mainstay. It is a staple in every child's household, I think. And it's been on for 20 seasons, 20 years, 25 years. One of the longest running, right? Pretty epic when Doodlebob, the little SpongeBob that stole the pencil that SpongeBob had and drew himself and was angry. And he would run around changing the actual cartoon, the actual show with the pencil that he had absconded from SpongeBob. And he'd do it in a demeaning, mean, angry little doodle way. Doodlebob, oh my lord, wonderful creators. Talk about creative content. Those were the gifts. And I think it still exists all over the place, and it seemed to be very, very deep. There was depth in Hollywood. I don't know though. Hollywood seems to stink anymore. The stupid Oscars. Who cares? Crappy producers. You know, pedophile. Hashtag Me Too management. Just cruddy. And the content, you got a lot of comic book movies. Those seem pretty good. Anyway, that's that. It seems today that people are now complaining because the stark reality on February 23rd of the amount of your tax refunds is really starting to come in and hit hold. The Federal Reserve, the IRS, the federal government stated there was going to be somewhere in the realm of $20 billion in refund monies returned to all of us, the taxis, the individuals who provide portions of our income to the government every year for government use. And I think the estimates right now, prior to our April whatever tax day deadline, the estimates of tax returns en masse total is somewhere $11 billion below that. No! $11 billion below the $20 billion estimate. That's an important figure because that money goes back into us, the people, goes back into the mass of individuals here, and then is spent. It's spent on everyday expenses. Some of it's saved probably. Some of it's spent on bills, outstanding costs. Some of it's spent on entertainment and vacation. Some of it's spent on home improvement. That's a large monetary reinjection back into the health and welfare of our country. And when that number is more than half smaller, diminished than expectation, that's bad. So instead of 20 billion, you're talking 9 billion. No bueno. That's bad juju. So that was a flag that came out, and a lot of people got alarmed. Well, now we're hearing more and more that the tax refunds themselves are approximately, to date, February 23rd, 17% below what they were last year. And right now, the tax authority, the IRS, the Internal Revenue Service, the federal government, the Treasury Department, they are stating, whoa, hold on. Everybody slow down. This might not be accurate. Let's take a deep breath so that we don't have some furor, some irrational, massive, chaotic response. And they want to wait for more of these tax returns to be processed. Personally, my tax return provided half the income that I got last year. I am not an individual that takes an aggressive stance toward the taxation, your withholdings, my tax return, the expectations as such. My father taught me a long time ago that these are the things that allow the government to provide us with the services that we have. So up north, everybody in the northern U.S. right now, they have snow-plowed streets, you have cleared sidewalks, you have delivery of your mail, you have all the things that the government provides you annually for the services that allow us to operate. Your utilities, right? Your government services, all those things. Your veterans benefits, your Social Security benefits, your local and state government benefits, your federal government benefits, all those things, and a lot of them unassumed. Working, signage across your traveling environments, on every street corner, all your lights, everything that the government gives us that we take for granted. You walk out and jump in your car and you go, and you're like, yeah, that was put in place by somebody, and it's managed, maintained, upgraded by somebody through your tax dollars, through your participation in this overarching government and plan. And I appreciate that, and I'm thankful for that. Your garbage is picked up, right? All the things that we have. You have clean drinking water, it's treated, right? All those things. That's what my taxes pay for. And because of that, I've been conservative. I claim 0 withholdings so that the maximum amount of my money is removed from my pay, because I never want to have to owe come tax time. Is that foolish? Often it's stated as foolish. From a financial perspective, it is foolish. I am allowing the U.S. government to use my money, because I earn it, to make interest, to have in an account for them, to be able to spend that with the expectation that come tax time, come our evening up on what they take from me and what I was supposed to pay, so that I either owe more or they pay me a return, a refund, that I always leave it so that they have the surplus that they then owe me. And that is foolish. If you talk to tax accountants, if you talk to numbers people, financial people, they will always tell you, find the number with your income, with your expenses, your credits and your debits throughout the year, where you break even, where you don't owe them and they don't owe you, or it's the smallest amount either way. You have then optimized your income, your gross, your net, the taxes that you pay, the debits, the lifestyle that you live with your money going out and then money coming in, your purchases, your income, so that it's fully balanced. And then they're not holding monies that potentially you could have in an account making some kind of interest, a certificate of deposit, a savings account invested in stock. And then you don't owe them money. You don't have to cash out on some of those. You don't have to take money out of a checking account, a savings account, and then pay the government. We all fall somewhere in there, and some people love to get all the money they can during the year with the knowledge that they'll pay money after taxation is trued up. And as such, come early April, they pay money. I don't ever like that. I don't like to pay money. And I don't like to pay money so badly that I'm the opposite. I allow them to hold my money, which is foolish. And I get fair amount of money, not huge. I'm not greedy. My father taught me, don't be greedy. Why would you be greedy and push the limits of your ability to claim back all of your itemizations, your deductibles, the things that you can apply against your income throughout the year, for the purpose of maximizing that refund, but with the expectation that maybe you're going to have some flags, some alerts that show up with the IRS or in your conscience, in your ethics or your morals. If it's fair and honest and you believe it and you earn that money, and then you're fair and honest with the way that you track that money, with the way that you spend your money, in the lifestyle that you live, the donations to Goodwill, the donations to the Veterans Administration, the money that you give to your church for tithing, the expenses that you itemize for your small business that you run, for the benefits that you pay out to your employees, for the costs of your children that don't live with you, right? All those items that you can track from a financial and a fiduciary standpoint, so that when these times come, it's clear, it's documented, you represent that, and then you're due, or the government's due, whatever minimal amount they're due, or maximum amount, large amount. And I completely agree with that. And to push those limits for your personal gain so that you optimize your refund, it's a choice. And as I said, my dad said, why? Why would you do that? I remember later in my life, my father, who did all of his taxes from a roll-down desktop or a fold-down desktop, gorgeous piece of antique furniture. So it's an upright piece of woodworking that stands on 4 legs that is waist high to a normal adult. And on top of it is, instead of a flat table-like desk that you normally have, a stand-up desk. And the front had a key that you would unlock the top and then pull the front down with hinges, 2 big U-hinges that would open up, and then you could work on the flat part of the front of the pull-down desk. Inside, the desk was built so that it had pockets, little shelves, folding areas, storage. You could put all of your financial or administrative data in it as a secretary or whatnot. Gorgeous piece of furniture that sat in my bedroom, and because it was in my bedroom, I experienced him doing his taxes annually. He would pull the thing down. It had ink wells, it had fountain tip pens. Welcome to 1950, bitch! It was before ballpoint technology. I shit you not. It had cartridge inserts for those fountain pens, felt tip pens. Awesome shit. Dude, I'm going to turn 50 this year. That's the technology I remember. I can remember the smells. It was filled with the wood pulp and paper products that had sat inside that desk for multiple decades. So when you opened it, you had a strong aroma of the products that were in there. The ink, the blue or black ink. No red. I don't think red was popular back then. Blue or black. The paper products, the receipts, the storage, the rolls of paper that he had that he would use for calculations if he had the little calculator, the little 10 finger. I mean, awesome shit. And he had documentation for each year. And sometime in his 50s, I was born in 69, he was 40 years old. Sometime in his 50s, I think mid-50s, so I would have been 15. So it would have been 84, 85, 86, 87, 88, 1984 through 88, maybe 82 through 90, somewhere in there. The IRS came and audited him. My father, an operating engineer who made a very palpable decision that he would not work in a high-powered, high-finance, big-money environment, a Yale graduate, said, not doing it. So he drove heavy equipment and machinery, was certified in operating engineer school so that he could operate cranes, backhoes, dump trucks, large equipment. So he was a blue-collar worker, a high-paid blue-collar worker in a Niagara Falls, New York that was under a power plant, a power project upheaval and development, utilization of the hydroelectric environment with new technology, which was fruitful in certain times, but it was still part of upstate New York, a wasteland, a frigid wasteland, 4 or 5 months of the year due to lake effect snows off of Lake Erie. So you couldn't break ground. Construction really wasn't an optimal job in that area. It wasn't here in Florida, 12 months of the year, where you're building sky rises somewhere, Atlanta, a major city, right? Pros and cons. And he was paid well, but there were droughts and periods where he didn't work. But I recall him doing his taxes in that desk, and I watched him spend days, multiple days. He did it on Sundays, Saturdays and Sundays if needed. A typical Sunday he did his bills, which was any period from 10, 11, 12 o'clock till 3, 4 o'clock. He would go through the op-eds, the opinions and editorials. He'd read some of those that he'd saved from the week. He'd do all of the paperwork necessary for his bills and payments. He would do his retirement, all the things that he did, all by hand, methodically, for decades. And on these occasions where tax time rolled around and he had to produce this stuff, I would watch, I learned. He had exemplary scripture handwriting. He had exemplary number writing. It looked like typecast. It was beautiful. Print and script. My father did. Exceptional. You would look at the things that he wrote on paper and it almost looked artificially produced. Whew, I remember reading them. Beautifully. Almost calligraphy type sometimes. You could look at the way that he did his script. But what I really remember was the bold print that he put out. He often wrote in caps, all caps, and it was almost perfect. And I remember how atrocious my script was because I was young at that age, where you had the phonics and the writing worksheets with the split lines and then the line down the middle, and it was dotted so that you had a very specific area where you would practice your D over and over on a page. And I was disheartened by how perfect his handwriting, his printing, and his numbers were as opposed to mine. It shocked me, and I was like, oh. And I recall all of these things, and yet he was still audited. Because as we know, the federal government shares. For the last 2 decades, maybe not the case, but prior to 1999-2000, they would audit a given number of individuals in any income range. It was a lottery. You were arbitrarily picked. They didn't have the computing programs. They didn't have the algorithms now where they can target and troubleshoot explicit groups that provide them with the highest return of audit, issue, or failure, or fraud. So nowadays, there's the possibility that if you stay within the means of software or an accountant or an accounting firm, a tax preparation firm, individual, professional, expert, you may never be audited, ever. But during the 1950s, 60s, 70s, 80s, 90s, there was a percentage, minute, but a percentage, that you would arbitrarily be picked, regardless of your income, to be audited. My father was audited, and I remember the trauma. I remember the seriousness. I remember that not a lot of talk, very focused and specific, pulling the information together. No accountants or tax professionals or tax preparation experts that deal with this. There's ads on the radio down here about individuals from New York. That's all. Levy. He's a Jewish trained financial professional that also has his accounting expertise and degree. And his buzz line, his tagline on the radio is, "You don't deserve a levy. Have a levy on your side, not one against you." And his name is whatever Levy. Robert Levy, Richard Levy, whatever. That's his tagline, because as we all know, if the IRS audits you, they have the ability to then penalize you. And many of us cannot pay that penalty if we are an individual or if we are a business. Can't pay that penalty immediately. So there's a levy against your monetary income, which you have to pay out in a regular basis, right? Because you owe the government money. So I remember that period distinctly, pieces of it. I don't remember the outcome. I don't remember what occurred. I remember him going to an office. I think it was in Buffalo or south of Buffalo, whatever the state office was, where he had to present the records of his taxes. I will tell you this, my father had a brilliant mind. His father had a brilliant mind. I think my father's mother was extraordinarily intelligent. My buddy Rika. The worms seem to be going away. We've gotten her to take the medicine in the dog food. It's wet dog food. So she seems very happy. Yeah, so my father was extraordinarily skilled with numbers, with math, with computation. And he was fair and he was honest. And I think it was a no-brainer, but it was tense and he had to prepare and perform the work. And I remember that period of multiple weeks and then hearing back from the findings of that. I don't think he had to pay any taxes, maybe nominally. He didn't make that much money. He was not well off. So I think it all worked out. But I remember the event, and it was not talked about, but it was palpable, and you could discern that that was going on. It was something was amiss in the house. And from that, I learned a lesson. He's always taught me that lesson. Be conservative, be smart, be fair, be honest. And that's the way I treat my tax returns. And I keep my receipts. I've always itemized my deductions. I have a ton of issue when it comes to children and my past marriages. So I have to manage those. There's nothing I can do about child support, which I've paid for a large majority of my adult life, and I continue to do so. That's part of what's, my income and my debits, my money that goes out. But stocks and all the things that you have to tie into your annual tax return. Yeah, so conservative and with no red flags and with the intent that when and if you are audited, you have no issue. And that's always been the approach that I've taken with the digital age, with the online tax software, with your tax software functionality, with the checks and balances that have been tied into tax software, TurboTax, H&R Block, all the options that you have now. It's relatively easy to do your taxes if you have basic organization, as opposed to the fully manual 1040 tax form that my father had to fill out with itemization. A multi-page, 10, 15, 20, 25-page document with all the supporting information, all the attachments, addendums, all of the tax forms that were tied to that. Tax laws were nowhere near as detailed as they were back then as they are now, but they were still extensive, and I remember his 1040 forms, all handwritten, unbelievable, with all the calculations that he made. And I think he even had a slide rule so that he could do tax tabular computations with your amortization tables and all the things that were relevant. Not even comparable to now. TurboTax. Let us spend a minute to analyze your tax software. David, our analysis shows that you are a minimal target for audit. You have full green acceptance. No tax flags occur or exist at this time. Unbelievable, right? So I still follow that, and I still, as he always said, stay small, stay out of visibility, don't be greedy. I still follow those fundamental rules that he taught, and that's the way to operate. Because that's usually the case. The minute you think that you deserve more or you can get more, you better be able to manage it when everything goes wrong. So that's the process that I follow. And clearly this year, a lot of people are complaining. Deposits have dropped, right? I think the average filing returns are somewhere in the realm of $2,500 or $2,700 this year. For direct deposits, the refunds are down. I pay for the insurance so that I can have the TurboTax team assist me in an audit. I have them. They have all my documentation. They will represent me. That's $50 or $60. There's also charges that come out of your tax refund, right? So what does that account to? Another $50. So it's a reduction of about $100 in services. Who cares? But it's half of what I got last year. And a lot of that's due, which people don't understand, to a greater amount of money, less tax placed upon your taxation of income, your gross, and then subsequent net income, but modification of the tax rules and laws that apply to the way that your net income at the end of each year is then levied or applied to the government amount that you owe, and the tax laws and the tax tables. Those rates have changed. Trump's team changed those, which is why some people, based on your income levels, are paying more. Some people are paying less. But in general, people are paying more. So your tax return is lower this year because you had to pay more in income taxes to the government, which lowers the amount of the refund that you had. Plus, they made explicit changes in your itemized deductions and your deductions of your family. There are a number of very explicit tax laws that they've changed in rules that directly impact the amount that you can deduct. Thus, your refund will be lower. And a lot of people didn't understand that with the tax laws. Nobody does. You try to read that documentation, and it's a volume of updates and then tax tables and amortization tables and all this shit. Nobody can interpret that. That's why there's lawyers and there's accountants, right? But it's clear that people are upset with the amount of money that they're returning, that they're getting as refunds this year. Clear. And it's clear that there's been a miscalculation in this amount of money being returned from the government. So we're going to have to see how this impacts our spending. We're going to have to see how this impacts the economy. how this impacts people that relied heavily on that money, on people that save that, on people that pay bills off of that or take vacations, and all that'll be tracked. So we'll have to see, and then we'll have to see how this changes in the 2020 game we've got going here, because our elections are up and you've got a lot of Democrats that are pushing different taxation. High taxation of the rich, whatever we classify the rich as, your 1%ers, your billionaires. So there's probably going to be changes in this. So, long-winded and such, wanted to address the current tax environment and a lot of the response from individuals. See how you're being taxed, how your refunds are coming back. I've had people and friends around me that say, I claimed multiple deductions, I had less money removed from my base weekly, bi-weekly pay, so I earned more income in each paycheck, and I made more money in my refund. And I sat back and thought, oh, okay, well, what did you lie about? How did you do that? Because that should not occur if you're following a similar income bracket and you're following similar deductions and lifestyle components that you had prior years. If you've had extraordinary changes in your life, a divorce, a death, a new child, a house, income, investment property, things like that, sure, that will change, but for most of us, that should not be the case. You should not have gotten more money in your paycheck and a greater refund. That's not how this works. If you're doing that, you might want to check your ethics and your morals. So, just some discussion items on complex stuff that people really don't like to talk about, but man, when it comes to bottom line money, everybody gets their shorts in a bunch, in an uproar. So check your stuff, make sure you're looking at it. Good luck. Turn your tax information in. Get your taxes filed right before the tax day. And hopefully you got some money coming back. Thanks for listening. Comment, subscribe, like, share, all that jazz. At Dave DY Show, out.